Hi, it's Joe Mazumdar from Toronto at the PDAC edition of the Metals Investment Forum. Is with me right now is a President and CEO of Southern Cross Gold Consolidated, which is now a dual-listed company exploring for gold in Victoria in Australia. Mike Hudson.
Joe.
Mike. So we've talked about this project before in the September edition of the Metals Investment Forum back in Vancouver last year. So incrementally, what has happened in the interim? I know you had a big drill program that you're already doing right now with 6 to potentially up to 8 rigs. So what's happening with Southern Cross Gold?
A lot since September, Joe. So we've had 5 rigs now. We've got 6. We're going to go to 8. We had 2 discoveries when we spoke last time, Apollo and Rising Sun. We've added another 2, Golden Dyke under that old mine there, and Christina, and seeing the same very good grades, over hundreds of metres of mineralisation with multiple high-grade veins within those zones. We're doing more met test work. We're starting a lot of the permitting for the project. We've got a network of bores in there looking to access underground via a decline, so collecting all the data for that. The biggest news is that we've consolidated the capital structure in many ways and now created a very investable product that's simple. It's one company owns 100% of the asset. It's dual listed on the venture, trades as SXGC, and back in Australia as SX2.
And before it was just Australian, I remember there was the company that you consolidated with, Mawson, had owned 50% of it because Southern Cross was a spin-out of Mawson. And I think cleverly you worked out and tried to consolidate the share structure in terms of the owners prior, such that the actual merger was so much easier.
It was bringing together 2 halves of essentially the same thing, and now it's simpler. It's consolidated and dual listed.
Right, and then I think importantly, as we talked about previously when I was in Victoria for the site visit, is that most of the people that made money on Fosterville weren't from Australia, but they were from Canada, and so usually the people that have made money come back, whereas people from Victoria would still look at it like, oh, that's nice, but I never made money off of Fosterville because it was a Canadian listed company and Agnico bought it.
Yeah, the Canadians dominate the renaissance of the Victorian goldfields, and everyone knows the Fosterville story, but in 5 seconds it's been the highest grade gold mine for 4 out of the last 8 years on earth. It was the lowest all-in sustaining costs. It was a top 10 producer. It created $10 billion of market cap appreciation, and that was all in this market here. So what we've done in Australia over the last few years was really re-educate the Australian market about what a wonderful opportunity that the Victorian goldfields can provide, and Sunday Creek is Fosterville in many respects, geologically Mark II.
So in terms of the drilling, we're talking about regionally multiple kilometers, but the focus has been on most of the drilling on the 1.35 kilometer Sunday Creek. But you know, the median thickness, people get confused, I guess, thinking it's less than a meter when it's more like 3 to 4 meters. But you're drilling down now to kilometers. A kilometer, sorry, and you've got an exploration target there of about 1.6 kilometers, but now 1.6 million ounces. Now you're going to come up with a new one according to your presentation.
Correct. We've stated that in March we'll be putting a new exploration target together that will be drill constrained, and we'll treat it like a resource. We're running internal resources with SRK who do the resource work at Fosterville and Costerfield. So we're bringing that knowledge in, and all the specialisation on how you deal with these high grade, moderate nugget, not high nugget deposits, and so we're going to put that around. Literally 2/3 of our discoveries, the western side at Christina is just a little bit earlier in terms of drilling, so that's all upside, if you like. And basically, we've doubled the scale of the project in terms of drill footprint over the last year. So stay tuned.
And so that was the exploration targets. I think we were talking about this. It's a common thematic in Australia, so but it's not very common in Canada. to have exploration targets.
There's, there's exploration targets and exploration targets like there's resources and resources. So you can actually produce exploration targets under 43-101, but it must be more constrained than the Australian version, the JORC version, where you can put targets around geophysical anomalies, for example. Now, we're very much in the Canadian scheme anyhow. We've got density of drilling that's not over the entire area ready to put into a resource. We're running subsets of that as a resource, so we're taking that learning from that subset and expanding it into where the drill holes are, say, 100 by 100 metres, and we need 25 by 50 to put it in a resource.
Right. And that would be an inferred resource.
Correct.
Right. Okay. And so also, I mean, we're constantly talking about this 1.35 kilometer strike length of Sunday Creek, but you've got a bigger land package out there. So how do we quantify that going forward?
Well, it's an amazing upside. You never really want just a little land package or a minimised geology to not expand into, because what we're driven by value in this business is what one of our major investors defined, Pierre Lassonde, the Lassonde curve. So we're up on that first stage of discovery, but at some point over the next year or two, we'll get to that peak where we'll start being boring around that initial discovery and drilling it out and engineering. So you want to bring in another Lassonde curve and a new discovery, and so and then you can do it again. So they become additive, the curves. So ideally, on a per share basis, your price is increasing, which is everything we need to do in our industry, and we need to get better at that at every point and focus on that. So bringing in the exploration upside now when we don't need it, but we'll need it in the next year to 18 months. We're very much focusing doing large geophysical surveys over 12 kilometres where the old mines exist. We've got access to another kilometre or so to the west with a recent land purchase now, so we can access that ground, which is immediate extensions of the western side of the project. So lots of opportunity and exploration upside. So you can see what we've drilled out, and then there's essentially the free option of the exploration upside. That's at a similar tenor of scale, at least, as the Fosterville system.
So the attraction for Fosterville is it's a unicorn deposit in terms of very high margin, great metallurgy, low cost, and you're looking for another one at Sunday Creek, or trying to quantify another one at Sunday Creek. But as you were talking about, we had this conversation previously, is like you talk about, okay, the value's in the gold, which is 80% of the in-situ value potentially as you know it right now, and 20% is in this antimony. And antimony background, China banned it from the US and now banned it everywhere. But you talk about it being a help in terms of not only permitting, but potentially cost of capital. How does that work?
Yeah, so I think it would be a little forward of me to say that Sunday Creek is the unicorn yet, but it is a very rare, high-grade, multi-million scale, multi-million ounce scale asset. So it is a very rare asset, and then we're very fortunate in many respects to have 80% paid for by the gold, or future to be paid for by the gold, and 20% being the antimony. And antimony is strategic, critical, defence critical. You don't have a defence industry without antimony. 80% controlled by China and Russia, and all the things that you said around it. So the antimony is very much desired. There was the only smelter built outside of China in the last 30 years was in Oman. It shut down halfway through last year in 2024 because it couldn't get feedstock. So these concentrates that this project will produce in the future, it will be in great demand. The Western world is calling out for it, and we're one of the solutions. It will be one of the larger projects in the Western world in terms of antimony. So if we can lower our cost of capital by having a prepayment, for example, made to help build the project, it will help permit, because it's absolutely strategic and critical for government and society. So there's a very different conversation around a critical metals project than a gold project alone.
Is that a special thing in the Australian and the Victorian government in terms of allocating a special regime for projects that are critical?
Absolutely. They came out with a new critical metal strategy. So thanks for that, Dorothy Dixer, here to help, in December. So they announced a critical metal strategy. It had specific antimony-rich zones that will see fast tracking of permitting. They will limit their permitting timeframes to the key environmental permit for mining called the EES to 18 months. And many other aspects around that piece. So very much the Victorian government is on side, and having that critical metal associated with the mix is vitally important for us. So the government is seen by many in Australia as not supportive of mining, but the corollary is absolutely true. They permitted 2 mines in December and talk about wanting to permit at least 1 mine a year, with that benchmark 18 months time frame really globally leading in many respects.
So, and I know you've got a lot happening, but maybe if we could summarize what's going to happen for the rest of 2024 for Southern Cross post-consolidation and dual listed.
Yeah, so we are going to increase the drill rigs. So we're going to continue to expand the body, whether we've talked about that. We'll continue to drill out the body. I don't think you'll see a resource this year, as we're focused on making it bigger before we announce it. And we're converting monthly many ounces from the exploration target to the resource. So it's not in absence. We're doing a lot of the MET work, second stage. The first stage sighter test showed no red flags, and we're advancing that work to optimise that work. We'll be permitting a lot. We like the idea of progressive permitting, not going to the government with 500 pages. So looking to get access to drill from underground and access the mineralisation, which will bring the drill out many years quicker. So we'll be doing that. So we're doing all the environmental work, including hydro work, and put 8 bores in, or 9 bores now we have for all that work, etc. So a hell of a lot more cut to come. Building it bigger, demonstrating the multi-million ounce high grade, top tier grade will still be the driver of value, but all that groundwork and de-risking it to the permitting is also ongoing.
All right, so lots of catalysts from the drilling, a potential updated exploration target, and then maybe some news on the permitting front, and maybe do you think that strategic sort of notice on the project would happen this year, or is that something that's more?
Well, we're not in a rush because we know we've got a very valuable product, so we're still making it bigger. So we don't want to sell the upside and that opportunity too early, but we don't want to demonstrate its reality. So we're having many discussions at the very top levels of the US government. We're in Japan, through Australia, and there's samples in lots of various jurisdictions to test the thesis of that, but I can't really predict that, but it's all ongoing.
All right. Well, thank you very much, Mike Hudson, CEO of Southern Cross Gold Consolidated, dual listed gold explorer and antimony explorer in Victoria, in southern Australia, southeastern Australia. That's it for me, Joe Mazumdar, Exploration Insights from Toronto at the PDAC edition of the Metals Investment Forum. Thank you for watching.